But even with all the recent volatility, we're just about where we were a year ago. So what does this action tell you, Guy?
Well, the stock market's definitely the star of the show, but behind the scenes, it's what's going on. Tim's talked about Karen, Dan. It's the weakness in the U.S. dollar, which, by the way, should be alarming a lot of people out there. I mean, the move the dollar's had over the last couple of weeks has been historic. Dollar yen below 141 should be flashing red lights the same way they flashed over the summer, August specifically. And the bond market is clearly a story because people, I think, are starting to question the whatever of our U.S. debt and our U.S. dollar, and I think they're fleeing it, and you're seeing it. People now are trying to get short the U.S. dollar through any vehicle they can, and they're selling their treasuries like yields are headed back to 5%, which, by the way, I think they are.
All of this was in place for weeks, maybe even months, in terms of the downward pressure on the dollar, as well as downward pressure on bonds themselves, yields higher. But with this call, the repeated calls for Fed Chair Powell to leave or be kicked out, that puts more uncertainty under this whole thing.
Absolutely, for sure. I think that more than anything else, I mean, the tariff stuff we've worked with, that's been in the place for, since Liberation Day or even before Liberation Day. But this rhetoric being ratcheted up significantly to get rid of Powell, I think, is very destabilizing, counterproductive. And so it's interesting. We think, where were we a year ago? Bonds weren't that different from here. Maybe we were entering about the stage where the Fed had stopped tightening. They were on neutral for a little while, heading to cuts soon. And it seemed like AI was very different then. So this is a lot of the things the same, but it feels very, very different. Yes.
Well, it feels like emerging markets. And to me, again, I'd take stocks, bonds, and the dollar all going down in the same day. This is the stuff that I did for years. We had Steve Leisman on Friday, and he kind of stole my metaphor to are we Turkey? And with all due respect to a fantastic country with great food and a great part of the world, but we don't want to be seen as having the same economic, political, and really, unfortunately, conflicted central bank dynamic. And that's kind of the story. I mean, an independent Fed is one of the tenets of our capital market system, frankly. And even those that feel, and I think many of us do, and certainly there have been times it's obvious, the Fed has overstayed their welcome in our markets since the financial crisis. And I think Scott Bessent's one of these guys. I think, these are also, I think, times to point out just how important it is for the central bank to be where it is. Back to the equity market, we're within 3% of the closing low on the S&P, so we've come down. Last week you had those bear crosses everywhere on the NASDAQ and on the S&P, and they're real. And again, that downtrend from February 21 is one that I think, until proven otherwise, is the trend that you're following. And we're just getting into earnings season. So we've had 15% of the S&P. And while I think we can all say that probably that first quarter, especially with some pull forward, was pretty decent, I think this is the part of this that really could possibly, usually you wait for earnings season to give you that backstop to get back to fundamentals. But we know we're not going to hear anything great out of guidance.
Yeah, so it's not just, to me, about the economy and what's going on in the markets right now. It's anything. Just pull open the Wall Street Journal, the Washington Post, the New York Times, Bloomberg.com, CNBC. It's like a deluge of stories that actually don't all have to do with the markets and the economy, right? There's just no shortage of things that there is an attack on the norms. And, you could say that's political, but it's not. Look at the Washington or the Wall Street Journal. It's owned by Rupert Murdoch. There was 10 stories over the weekend that are really attacking the processes in which this government is kind of like looking at things. And, there was an article that really hit me today. It's that Trump is everywhere except in the economic data. And it's talking about how the data is not reflecting what's going on just yet. And so what Tim just said about the quarter, it's baked in the cake, right? And then the guidance, it's just as clear as mud. And then when you think about just what is the sort of headline that could cause some sort of ease in the economy or the markets, I'm hard-pressed to see what it is right now. I really don't, aside from them saying, hey, we're just kidding. There's going to be no trade war and we're not putting tariffs to the extent that you think. But I actually think that would be really bad at this point. It'd be bad for our credibility. It'd be bad for our standing in the global order here. And so it's a really bad place because all of the sorts of, plays in the Fed's playbook that he's being attacked for actually may not work in this environment right now. You know what I mean? Like usually if you have an economic crisis or whatever, you lower interest rates. And I think that's what you're suggesting about, like third world or Turkey or that sort of thing. So I think we're in a really tough spot here. And the market, I think, is yet to really reflect that. If you think about an S&P that's only down 15% in the year.